The number one story around the world right now is the tariffs that America is imposing on the whole world. It is a wild story, but you can make a lot of sense, and we're seeing things start to play out that do also make sense, again, when you understand how money flows. But there are some surprises as well. Okay, so Trump comes out, announces a load of tariffs. He did inform the world he was going to do this. I don't think anyone really believed how big they were going to be, but he did. Now, this sent shockwaves through the stock market, and the stock market has been absolutely murdered over the last few days. But it makes total sense. So, for example, if you are going to buy a company, bearing in mind that that stock is valued based on how much profit that company is going to make. But now with these tariffs, say, for example, with an iPhone, you buy Apple stock. So you buy Apple stock and it's got its value based on, okay, how much profit is it going to make? How much growth is it going to be in the company? Well, now there's tariffs. Say an iPhone is now 50, 100% more expensive. What does that tell you as an investor? It tells you that that company is going to sell less products. Its costs are going to be higher. It now has a bit of time that it needs to restructure the business. Is it going to move factories to America? These are all extra costs that are going to take down the profitability of that company, meaning the stock sells off. It makes sense why that's happening. That's happening to all stocks at the moment as well. So then you go, okay, I'm selling out of this stock. I've sold into dollars. Where do I put that money? So traditionally you'd go, I'm going to put it into the next safe haven asset, which is gold. A lot of the time, gold is seen as the safest asset. Well, there's two. One is US Treasury bonds and one is gold. Now, we saw gold going on an absolute tear leading up to the tariffs, but it has now sold off. Now, that was a little bit of a shock. A lot of people have said, well, why is gold sold off? But if you look at it, gold was already pretty high. It was pretty overbought. There's another thing here to consider. If you're a gold miner and you have a load of gold stock and you want to export it, you now have tariffs imposed on you. It's now more expensive to produce gold. So you might be thinking, well, I'm going to reduce my production of gold now. So then you would think, okay, if the supply of gold is going to reduce, the price of gold should go up. And yes, that may happen in the long term. But initially, the gold miners' costs have gone up, including things like not just importing and exporting gold, it's importing materials like chemicals needed to mine the gold, machinery, manpower, all this kind of stuff. It's going to start costing them a lot more money. So what do? If you know as a business you're going to be reducing your production, you sell off your current stock to maintain profits. So you've got enough of a cash flow to maintain your business if you're going to be selling less. So looking at the gold market right now, it is coming down. I think people are anticipating this. People in the know are looking at that and thinking, you know what? And I think a lot of that is the supply of gold being dumped on the market. And so now as an investor, you've got your money, you've sold out the stock market, you can't put it into gold. Then you're thinking, right, I'm going to put it into the next safest asset, which is treasury bonds. And we are seeing this happen. The yield of treasuries is coming down. And so you can actually see that the money is flowing in there. So the interest rate is now below 4% for a 10-year treasury bond. Why is that important? Well, because the interest rate on the 10-year treasury yield directly impacts how much borrowing cost is going to be. So let me explain. If you're a bank and you're going to lend money to a business, say, and that business wants to borrow the money to grow its business, which increases the economy, you are going to look at the 10-year treasury and say, hey, if I can get, say, let's use a figure of 5%. That's risk-free also. It's seen as the safest asset in the world. So if that's risk-free, I can earn 5%. I'm going to want to charge 8% to make profit. Remember, banks are for profit. I'm going to want to charge 8% to anyone who's going to want to borrow money. And this can impact mortgages. It can impact companies trying to borrow money to grow their business as well. But what happens there, you get two things. That cost is passed on to the consumer, or that business decides not to borrow that money. So things slow down. But the creation of money is taking on debt. Remember, money is debt. It's a lot to get your head around. I explain this on the course I teach, but just for the purpose of this video, just accept that the creation of money comes from taking on debt. So if banks are now looking at the treasury yield coming down, they're more likely to think, okay, I will charge a lower amount to businesses and consumers, meaning more people start to take on debt, meaning the economy can start to grow. But the key here is more debt is created, meaning the money supply increases. That's what's good for cryptocurrency, because the more money that is in circulation, the higher the devaluation of currency is, the better chance money is going to flow into cryptocurrency. So there is a big picture going on here. But also, if you consider this, you now have taken your money out of assets and you're thinking, where do I put my money? You're going to be looking at the stock market, which is traditionally where a lot of people put their money to get a better interest rate than the treasury bonds. And you're going to be thinking, well, how long are these tariff wars going to go on for? Because some countries have come back saying, hey, we're going to remove all of our tariffs and so that you remove yours from us. Amazing. Great idea. However, there are big economies that are like, screw you, we're going to put more tariffs on top of you. So that creates this trade war that we may or may not be going into. And I don't care what anyone else out there is telling you, nobody knows what's going to happen. Absolutely nobody knows what's going to happen here. So at the moment, we've got some big economies coming back saying, hey, we're going to increase the tariffs, so we have a trade war. How long is this going to go on for? And as an investor, I will be looking at the stock market and thinking, who knows how profitable these guys are going to be and how long this is going to last for? Because it could last for 2, 3, 4 months. It could last years. We just don't know. And the profitability of these businesses is going to be massively affected. So we've got to wait and see what happens. But the reason why this was incredible for crypto, stock market started to dip, gold was dipping, but Bitcoin held steady, held strong in the range it's been in for quite a while. What does that say? There is confidence going into Bitcoin and crypto. Because here's the thing, you buy Bitcoin and you want to send it across the world, do you know what you don't have? You don't have tariffs. So you have a store of value that you can send across the world instantly, doesn't have tariffs, there are no borders, and it's holding its value pretty well at the moment. So it's interesting to see this happening. Is it decoupling from the traditional financial system? We don't know. We've got to watch this play out. But wow, it is really interesting to watch, and we're watching it real time. So if you're worried about price, don't be. This is incredible to see.